Now something very similar is also happening. We have increased volatility on the SPY now that we've reached these higher levels, and we have decreasing volatility on the SDS. So it's only now it's a matter of just kind of choosing and watching for this rounded bottom to start taking place in the SDS, and seeing if the volatility will lead to lower prices on the SPY. This is this is an incredible way to trade. Now I have to tell you though, this type of trading only, like I said, it only came around in the last couple of years, and the only reason I found out about this type of trading at all was because I happened to meet a trader from Goldman Sachs. And he was discussing some of the trading strategies that Goldman Sachs was using. And I don't know if you recall, but back in 2008, 2009, and 2010, Goldman Sachs had tremendous records of trading profits. It was just amazing, astounding at the trading profits that they had. And I can't tell you for sure that this is the exact strategy they used. However, it was given to me. Strategy was taught to me by someone who was involved in the markets at that time doing trading strategies for Goldman Sachs. And they used what they called, in fact, it's a George Soros term as well, as reflexology. Reflexology means that the markets tend to to snap back to equilibrium levels after being oversold or overbought. And in this case, I put 2 to 2 together, and I started coming up with this idea that in fact it was the SPY and the SDS that, and a number of other different markets in which you had short ETFs for the index ETFs that you could trade, that sought out these equilibrium levels. And like I said, it's because they are traded instruments, and the computer algorithms are constantly monitoring these ratios of short and long ETFs that I think makes this type of trading possible. So very interesting here. Now this equilibrium level is at 105.87. Now I didn't come to that when they crossed. I actually came to that as the difference between the high and the low spread. In this case, it was about 42.50 and 110, so about the middle was about 105. In this case, you can take a look at the waves in the spread here. The spread here is 20 and 132, and you get a difference there of about 110 points. So the equilibrium is going to be, so the way I measure it is a couple different ways. Number one is I measure it by the difference in the last two peaks that are close to each other. I try to center that, as well as the last point at which they crossed, creating the new equilibrium point. At this time, it's at about $91.51 for the SPY, and we are at 125.76. So not only is this equilibrium point at the point at which I would look as a target, if I was shorting the SPY, that's the point at which I would take myself out of the market. So if I shorted at 125.75, I would look at my first target is 91.51. I would tighten up my stop on that trade, and then to see whether or not it would cross or not, or look for further indication that in fact the SDS was starting to go into a volatile period, and then get out of the position altogether. So there's a couple different ways you can trade this. Number one is you can simply trade the short side of the SPY by buying in the money calls. Remember, or in the money puts rather. Remember, we talked about the fact that as we trade, we want to try to participate as much as possible using the leverage of options in order to trade the markets. And I always like to buy a delta of 85 or higher. That gives us the greatest participation. Now, maybe not the highest leverage, but it is the highest participation in the market, dollar for any decline in the SPY. So I like to buy in the money options. I like to sell premium for options. I do not like to buy premium. So I like to buy in the money. Now, it's one fallacy that a lot of people have about the options market is that, you can buy a cheap option and it can make you a fortune. And that might be true in the same way that if you buy a lottery ticket, you could probably win as well. It generally does not happen. And you can buy a lot of cheap options and never make a dime and just see the premium eroded in those options. If you really want to be a professional trader, you want to buy in-the-money options. You want to buy as much delta as you possibly can, probably around the 85 to 90 level, and then stay with the trade until the trade tells you to get out. In the next video, we're going to